In today's dynamic marketplace, flexibility and convenience are key factors in ensuring customer satisfaction. When making purchases, customers often seek the ability to split payments between multiple payment methods, allowing them to leverage various sources of funds. Split payments provide a practical solution for retailers and customers alike, accommodating diverse financial situations and preferences. In this video, we will explore the concept of split payments, their benefits for both businesses and customers, and how this functionality can be effectively implemented to enhance the transaction experience. Understanding split payment. Split payments refer to the practice of dividing the total cost of a purchase across multiple payment methods. Instead of relying on a single payment method, customers have the flexibility to allocate different portions of the payment using various sources, such as credit cards, gift cards, store credit, or multiple bank accounts. This versatility empowers customers to manage their finances efficiently and make purchases even when they do not have sufficient funds in a single account. Benefits for customers. Enabling split payments offers numerous advantages for customers, enhancing their purchasing power and overall shopping experience. Financial flexibility. Split payments accommodate customers who may have limited funds in a single payment method. By allowing the use of multiple sources, customers can cover the purchase amount by combining available balances from different accounts or payment instruments. Gift cards and store credit. Split payments allow customers to utilize gift cards or store credit alongside other payment methods. This facilitates the redemption of gift cards or loyalty points while simultaneously using alternative payment options, providing added convenience and value. Budget management. Split payments enable customers to adhere to their budgeting preferences. They can allocate a specific amount to be charged to a credit card, for example, while using cash or a debit card for the remaining balance. This feature empowers customers to maintain control over their spending and make informed financial decisions. Benefits for retailers. Implementing split payment capabilities within a retail environment benefits businesses in various ways, ultimately driving customer satisfaction and sales growth. Increased conversion rates. By offering split payments, retailers can remove financial barriers that may hinder customers from completing a purchase. When customers have the option to divide the payment, they are more likely to proceed with the transaction, resulting in higher conversion rates and reduced cart abandonment. Enhanced customer experience. Split payments contribute to a positive customer experience by accommodating individual preferences. This flexibility demonstrates that the retailer values their customers and is committed to meeting their diverse needs, fostering loyalty and customer satisfaction. Expanded sales opportunities. Enabling split payments opens doors to a broader customer base. Customers who may have limited funds in a single account can still make purchases by leveraging multiple payment methods. This inclusivity leads to increased sales potential and a wider reach for the retailer. Implementing split payment functionality. To implement split payment capabilities effectively, retailers can leverage modern point-of-sale systems or e-commerce platforms that support this functionality. These systems should provide a user-friendly interface that allows customers to select and allocate different payment methods during the checkout process. The split payment feature should be integrated seamlessly into the payment workflow, ensuring a smooth and efficient experience for customers. Retailers should also provide clear instructions and guidance on how to split payments, empowering customers to utilize this option confidently.